Well, hello, everybody. So go ahead. Sorry.
At this time, I'd like to introduce Bev Beyers of Beverly Beyers CPA. She'll be giving us a 10-minute presentation today. Thank you, Bev.
Thank you, Erica. So I am a CPA. I own my own practice. I have no employees. I have a couple of commissioned agents that I work with, which means that I put out kind of on a site that they can pick up some tax returns and go through. Tax is about 30% of my business, and I keep up with that, and then I do contracting for another 50% or so, and then the remainder is planning and bookkeeping and just sitting down with business owners and helping them talk through their issues and just game planning with them, better ways for them to do the things that they do. So I've been in this business about 25 years, so 20 plus years. I worked at large firms for 22 years of that time, and I've been out of my own for the last 2 years or so at this point, so kind of getting my own business. So the 20 years of networking that I did prior and all of the employees I had and the clients that I worked with have been wonderful throughout this process where I've transitioned into my own business and have been really able to leverage those to do the things that help me make my own business a success or start to make it a success. So as a CPA, you are required to have a certain level of education to get into this group. And you have to have 150 hours, of which 36 must be specific to accounting. Because they went to that rule, almost all CPAs nowadays have a master's degree. Because if you're going to get the 150 hours, why would you not also just get a master's degree? So they've come up with some special programs. So most CPAs will either have a Master of Science in accounting or a Master of Science in tax. And I have a Master of Science in accounting. So a little bit general from that side of things. So I wanted to talk about overcoming objections a little bit today. And David gave a great example earlier of when people come and say, why would you not want to extend? And he's exactly right. You get a better quality product, and especially in today's day and age where we've got the Simplification Act that came out a couple years ago that was signed into law by Congress, they are still writing the interpretations for that. So as you go through the year, a lot of people last year filed a little bit too early. A whole bunch of interpretations came out. They all had to amend. So, it's kind of one versus the other is, if you wait a little bit, you're going to get some better interpretations. You'll know better. You might have documents that are late, especially if you're involved in riskier investments. Those tend to come in much later during the year. And also, a CPA does a better job when they're out of kind of the crush of doing all of that business and just can spend the time. They've got time to sit down and talk with you and make sure they didn't miss something. Some of those filings before April 15th have a lot of, I got this done and I got it filed, and then you look at it 2 months later with the client and they're like, oh, but I never told you about this. And you're like, oh, well. And we're going to have to kind of amend and kind of go through that process. So you really get a better product out of it from there. It just gives everyone more time to think about it, the client and the CPA, and really do a better job with everything that's going on. So that's one thing to look at. And like I said earlier, I am currently extending anybody who wants to be a new client as of today and just saying, there's no way I'm going to get to it by April 15th. I must extend you, and kind of go on from there. With the extension, as a personal business, you have until October 15th to get done. As a business, you would have till September 15th to get done. So if your business passes through to your 1040, you're considered an individual, not a business. You would have to have a separate filing for your business to have to file by the September 15th date, okay? I also have a not-for-profit business where I do 990s, their tax filings for them, and those aren't due on extension until November 15th. So it kind of helps me spread my work throughout the year from that side of things. So those are kind of a basic overview of those clients. So I did get a couple of questions, so we'll go through that. One of them was on the new W-4, and I thought I'd hand it out, and I'm pretty sure I made enough copies. So you do not need to refill out the W-4. Did I give you two, Erica, or just let me have one back? Thank you very much. You do not need to fill out the new W-4 if you don't have any changes. So if you're a current employee getting a W-2 from your employer, there's no need to refill out the W-4s unless something has changed. So now, it's a good idea to take a look through it and make sure. And it is my recommendation that you actually do some sort of a practice, like either redoing the calculations that are on the W-4 or going on the IRS website and looking and seeing and making sure that you're withholding at the proper rate. So you want to do it usually in the fall and then again in the beginning of January so that you've got your withholding set up properly for the year coming up. It's important to make sure you go through that because you don't want the government taking out too much and you get a huge return, because the government is a terrible investment and you want to stay out of that, and you want to be your goal would be to be as close to zero as possible, or get a little back or have to pay a little in. My goal is to pay a little in, but everybody has different goals, and some people manage their money using their withholding. So they have different goals and you need to be able to plan for those. And the IRS and the W-4 give us those tools when you're an employee of a different company. I've sat down with a couple people, new employees, as they've gone through this, and it's a little confusing for them. A lot of them didn't realize that the W-4 had more than one page. It's always had more than one page. In fact, this is actually a little shorter than what it used to be, but it does it differently. It does it based on a numbers basis or a dollar basis more so than a exemption basis. That's still in there, but it has you come up with dollar figures instead. So it's a little bit, they're trying to make it more user-friendly. I think the jury's out on whether it's more user-friendly or not. So if you're a current employee, you have a W-4 on file, you're probably fine without filling out a new one. That doesn't mean that you shouldn't look at your withholding at the beginning of each year, because the tax tables change. And so your withholding changes and you don't even know it. You just didn't do anything about it, but the withholding itself will change. So it's important to take a look at those things as you go through. Then the meals and entertainment exclusion as well. There's still guidance, like I said earlier, there's still interpretations that the IRS is coming out with. You can take a 50% deduction. There is some guidance on it that makes it look like you can only do that if you are paying for said client or future client's business. So you want to talk with your CPA about any specific thing that you have going on where you're like, okay, does this fall under the meals? Is it entertainment where I can't take it anymore? You can still take a meal deduction. You can't do entertainment. You have to be able to delineate those if you have two things going on at the same time. So there's some rules in place.
You cannot deduct entertainment anymore?
You cannot. So if you buy tickets to the Cowboys game and it includes food and entertainment, you want to make sure those are easily delineated on the bill so that you can, you can't take the entertainment piece. You can potentially make some case for it being a marketing piece, but they're still kind of going through and coming up with those interpretations. So I would be careful and prepare to have that one denied at some point in the future. So, which means at some point in the future, you may have to pay a little extra in if you took a deduction that they decide isn't appropriate anymore, no matter how you labeled it. But you can still get your meals deducted from that side of things. So, questions from the fabulous group we have here today. Oh, microphone.
I think you told me before that our team, the lunches we have today, those are deductible at 50%.
I would call that an aggressive position. I've looked, they've come out with some new stuff on that, and so you're out getting future business. So that meets the criteria, but you're not paying for the future business's meal. So it's a little iffy. So it's I would call it an aggressive position, but still one worth taking if that makes a certain amount of sense. So again, I would sit down and look over it carefully and go, here's the risks, here's what it would potentially cost you in the future. And we talk about it from there and make a decision about what to do.
But if I understood you correctly, if the group paid for it out of our dues would be 100% deductible.
Exactly, because that's a business expense to pay for the dues. So it's something we could look at making a change for even that would help us more from that side of things. You're exactly correct.
Okay.
Morris?
Yes, we always file extension.
Good for you.
A lot of times what happens is we'll get a bill from the IRS later on because of the withholding or whatever. In other words, we didn't pay enough in because we didn't have everything there.
Personally, or on the business's
Business,
941s?
the business.
Okay, gotcha.
And so just have to be aware that if whatever you've paid in taxes, if it happens to be a little short of what it comes out to be, then they'll bill you for the difference.
Yes.
It might be a couple $100 or it might be whatever, but it's usually not very much. But it's certainly not worth not doing it, because there's a lot of advantages to it. I don't think in 10, 15 years we've never filed it on the 15th. Our accountant just knows, okay, I don't even have to tell them anymore. They just automatically
They just do
file
the
it.
extension and go, yeah.
So
that's all I've been doing this week, is filing extensions.
So anyway, I thought, but you just got to be aware that sometimes you do have to pay a little more after the end after it's all done, if there's a difference. So
Exactly. Because it's an estimate at that point when you file the extension. That's true. Anybody else? All right. Well, that's it for me. Thank you guys very much. Beverly Beyers with Beverly Beyers CPAs.